Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, the market has come roaring back, guys, after a couple, very choppy and not great weeks there. Definitely coming back on the backs of this potential political shift. A lot of folks are very excited about, what is to come and the potential for a very friendly crypto friendly regime change that may occur in the next few months. Apart from that, the big things on the horizon, like I've kept mentioning, the ETH ETF has been pushed off yet again, but we have a date confirmed for the 23rd, which is next Tuesday, for ETFs to start trading. The German government is also supposedly done selling their stash of Bitcoin, and FTX announced that they've settled with the CFTC for $12.7 billion. Finally, some cool news: Stripe has also added the option to purchase crypto. I think it's just Bitcoin, Solana, and ETH for their European customers. So seeing more easy ways to get access to crypto. But we're going to jump in here and talk about some tokens to get started. I'm going to talk about Telegram, the Open Network. So Layer 1 Protocol, the Open Network, TON for short, announced today that they're going to be building a bridge between Bitcoin and TON. So this is called the TON Teleport BTC. It is basically the aim of the bridge is to allow users to bring over Bitcoin for use in TON's DeFi ecosystem, including its lending markets and decentralized exchanges. So if you've forgotten, TON, which was originally technically created by the team behind the messaging app Telegram, they were kind of forced to separate the two. And so now there is some integration between some of the games that are on TON within Telegram, but they are different teams working on kind of different long-term initiatives. Telegram's been doing super well. They currently boast about 750 million in TVL, and they have about 550,000 daily active users and are growing extremely quickly. Definitely one to keep an eye on. Despite this news, though, they are down 1.1% for the week. All right, next up, we're going to go talk about Stacks. So Stacks is the Bitcoin infrastructure project. You can kind of think about them as like a layer 2 on Bitcoin / they offer a lot of tooling as well for Bitcoin. They announced last week that the SEC had dropped its 3-year investigation into the project and its company, and it's a for-profit company behind the protocol called Hero. With no action. The end of the case is another win for crypto and a string of regulatory cases brought by the SEC against individual projects. So in this case, Stacks really tried to work hard within the existing regulatory framework. Originally, when they launched their token offering in 2019, they actually launched it within the existing offering for offering private securities to non-accredited investors, which it kind of requires like mini IPO filing. So they did that way back in 2019, 5 years ago. They also tried when they launched to make sure that the network was fully decentralized before they released the token. So in 2021, they were really thoughtful about we want to launch a product, but we do not want to do so without getting in trouble. Whereas a lot of companies were like, whatever. Despite this, the SEC ended up bringing a regulatory case against the project shortly after its mainnet launch in mid-2021. So the dismissal of this case 3 years later, or the conclusion of this case, is a big win for Stacks and a big win for crypto in general. Stacks was up 23% this week on the news. All right, next up, we're going to talk about Maker. So last week, DeFi protocol MakerDAO announced a competition beginning next month for asset managers to apply to invest and manage $1 billion of Maker's reserves into tokenized U.S. Treasury products. So during the competition, Maker's basically going to be selecting which of the various tokenized U.S. Treasury products that are out on the market right now will receive the right to manage some of their Treasury assets. So these are assets that are technically backing their DAI stablecoins. So what happens is if you want to go and mint the DAI stablecoin that Maker creates. You go and you deposit ETH, you deposit USDC, you deposit there's a variety of other collateral types that you can deposit. And basically you will get DAI in exchange, and Maker then has that collateral asset. There are, loan to value ratios, and you pay an interest rate and then also a fee when you redeem. But the idea then is that Maker had all this ETH and this USDC sitting around. And so basically they were investing these reserves in order to grow that asset pile. So in the past, Maker made a lot of money just by charging interest rates on users who took out DAI. When crypto was doing really well and generally interest rates were pretty low, they could make a lot of money on those crypto loans. However, in the high rate environment, not as many people are borrowing in DeFi. We've seen a lot of activity was suppressed during the bear market. They actually switched their model and they started investing in short-term duration assets off-chain. And that has been very successful for their revenue, making money on that end instead of just on their interest through users. So this is basically a competition to see who wants to manage their chunk of assets. They actually had this money with another asset manager who they decided they weren't happy with how they were reporting. They're giving updates to the community about how the performance of this portfolio is doing. So they're opening it up for new people to apply. So far, though, BlackRock's Buildle program, Ondo Finance, and Superstate, all which have their own tokenized U.S. Treasury funds, have applied for this competition. Obviously, BlackRock's involvement has led to a ton of excitement and interest, as this asset manager has chosen to really deepen its ties within crypto. Maker moved 23% up on this news this last week. All right, last up, we're going to talk about WorldCoin. So WorldCoin is the decentralized identity solution created by another Sam Altman company, not as well known as OpenAI. But WorldCoin announced earlier this week that they were going to extend the vesting period of about 80% of the WLD tokens set aside for team members and investors. So this change was not too big, but basically they were increasing the vesting period from 3 years to about 5 years, just lengthening it instead of making it 3 years. The market has been super happy with this change just based on the price move up this week. There's been a ton of debate within, the crypto universe about the benefits and disadvantages of these large VC investors and invested in projects super early, and how it kind of really creates these big supply overhangs later on, how unlocks are really harmful to projects. And obviously we're seeing that with a lot of newly issued tokens in the market. So this is especially true in WorldCoin's case, given that only 2% of the supply is issued, and it inflates the project's value quite a bit. Currently, the fully diluted value of the company or the project is $27 billion, despite only 2% being issued. So not a big change, but the market really well received it. As I mentioned, it is up 59% for the week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next